Hello everyone, back again, back with me, back with the paper. The 2019 O-level paper 2. This is the last question, children. So no worries if this paper has been dragging for so long. It ends with this video, with this session. 2019 O-level paper 2. Yeah, 7th question, last question of the paper. Is this a counting question? Of course. Of course. Number 1, A. What is a bad debt? What is bad debts? What is bad debts? Well, easy question. Bad debt is a irrecoverable debt. Irrecoverable. How's that word? Komadek. How's the word? That is the shortest way you can explain with this word. Okay, if you are wondering, oh man, what the hell is that word? The word is formed with this word is formed with recover, okay, recoverable, that means can be recovered, can be taken back. You put this prefix ir, then it becomes irrecoverable, cannot be taken back from the debtors. Money which you should get from debtors, the customers should pay you, but they're not going to pay you for some reason. Irrecoverable debts. No, we continue. Debts which cannot be which cannot be which cannot be collected from the debtors due to some reason. Which cannot be collected from the debtors due to some reason. Bad debts. What is the objective of preparing an income statement by non-profit organization? Okay, income statement is what? Children, income statement is what? Income statement is the profit or loss statement. Profit or loss statement. Profit or loss statement of non-profit organizations. Why is it prepared? To calculate the surplus. In other words, if the incomes are more than expenses, then there's a surplus. This is the surplus, the gap. This gap is the surplus. This is the expense, the total expenses. This here is the total income. So income is higher than expenses. There's a surplus. It's like a profit. To calculate the surplus or the deficit, loss of a certain accounting period in a non-profit organization. That is why you prepare. The objective of preparing income statement. Okay, income statement by a non-profit organization. Let's write it down. B. To calculate the surplus or deficit generated surplus or deficit generated by the economic activities. What activities? Economic. Is it clear now? By the economic activities. Economic activities of a certain period in a non-profit organization. They ask the question with that word, preparing, what is the objective of preparing income statement by a non-profit organization? Done. That's it. Surplus or deficit. This is the key term. This is the key term. Surplus or deficit generated by the economic activities of a certain period in a non-profit organization. You have to write that. In a non-profit organization. Moving on. What do we have? How? Number of members of Pubudu Youth Society. Just the first look is enough. What is this? It's a non-profit organization. Number of members of Pubudu Youth Society. It's a non-profit organization. Not for profit, is 100. Monthly membership fee per member is 50. Following are some transactions related to the month of October. Transactions are given. Additional information. Let's take the additional information first. Let's take the additional information first. 20 members not paid membership fee for the month. Balance of the receipts and payments account. Balance is given. What balance? What balance? I have always told you that you have to look out. You have to notice the opening balance. Balance of the receipts and payments account. 1st October means opening balance. Opening. What is required? Easy. Preparing the receipts and payments account. Pubudu Youth Society for the month ended 31st. Children, receipts and payments account means the cash book. Receipts and payments account means the cash book. That's it. Just a T account is enough. All right. But I'll draw columns for amounts and description. Description, amount. Let's finish it off quickly. Easy question. Now, okay. This is not the income statement, children. Not like this. Not like this. Surplus or deficit is calculated in the income statement. See, income statement. Not like this. That is the income statement in a non-profit organization. Here we have the receipts and payments account of a non-profit, the receipts and payments account. of a non-profit organization. Okay, that is the cash book. Let's start with the opening balance. Opening balance, we have already marked 1st October 5,000. Take it up, write the name, Pubudu Society. What society? Youth Society. Pubudu Youth Society. Okay. What is the name? What is the name of this statement? Receipts and payments. Receipts and payments. Okay. Account. Details. Rupees. Details. Rupees. Done. Okay. Format done. Take the opening balance, take it to the debit side. Balance brought forward. Balance brought forward 5,000. Now check the information given. What are the information? Number of members of Pubudu non-profit organization is 100. 100 is the number of members into monthly membership fee per member 50. 100 into 50 how much? 5,000. 5,000. Yeah, but there is additional information here. 20 members had not paid membership fee. So 100 into 20. No. 100 is not the membership fee. Number of members is 100. So 100 into membership fee 50. 100 into 50. Okay, 5,000. Now number of members not paid 20 into 50. How much? How much? 1,000. Okay. What should you do? Subtract. Subtract. Why do you subtract? Because they have not paid. 4,000 is your membership fee collected, actually received. Okay, so let's put 4,000 into the debit side. Membership fee. Membership fee. Done. What other information do we have? We have these information. We have the expenses. Following are some transactions related to the month of purchase of stationeries. We have to take this. Must take. Purchase of newspaper. Must take this. Postal fee. Must take it. Donations received. There's a donation received. Must take it to the debit side. These are the credit items. These are the credit items. Cash payments, no money going out. Credit. Donation received. Debit. So let's put 3,000, 6,500 to the credit side. 3,000, 6,500 to the credit side. Stationaries, newspaper, postal charges 500. Not sure, but we can go up and check. I mean, the items we have to check again. Yeah, stationaries done. Newspapers 6,000. Postal is the 500. Okay. Donation received 3,000. That is the debit item. Donations is a debit item because it's a received money 3,000. That's it. Oh no, it's a very easy one. It's a lucky question. You can finish it in like 3-4 minutes. No additional information. Balance of the receipts and payments account we took. Everything's done. Just balance it and finish off. By taking the final balance of the receipts and payments account. That is the balance of cash remaining. Let's calculate it. Debit side is the higher side. 5,000 plus 4,000, 9,000 plus 3,000, 12,000. Put the 12,000 on both sides. What is the total of credit side? 6,000 plus 3,000. 9,500. 9,500 should be subtracted from 12,000. Correct. This is the balance. Balance carried down 2,500. What is the date? Children, date actually it's not very important in non-profit organizations when you are preparing receipts and payments. It's not very important, but let's put the date as the last date of the month. See, dates are not given. No dates are given, see. No dates. No dates are given. But let's put the month ended 31st October. We are preparing for the month ended 31st October. No? So let's put 31st October here. Okay. Balance brought forward also 2,500. 1st of November. Write it down. That's it, children. We are done with the first part. Here you go. With the full question, you can see the solution, how we have worked out. Yep. Okay. Next part. Oh, that is the financial statement question. Yeah. It's a financial statement question with additional information. You have to prepare these two. we have to prepare the statement of profit and loss for the year and statement of financial position. The profit or loss statement and the statement of financial position. Yeah. Now that is the third part. We are done with the second part. This is the second part. And the first part of the 7th question. Let's go to the third part and finish it off. That means we are done over successfully with the 2019 paper. Right. First, check the additional information. Don't even look at the trial balance. Just check the additional information. This is the closing stock given. This is the closing stock 31st December 2018. You know how to adjust the closing stock. This is depreciation 20% annually according to straight line method. Yeah, that is the only method you know, right? Accrued electricity. This is an accrued electricity. One time for the rest of your lives. Take this once at once. I'm drawing the profit or loss statement and the statement of financial position in the same slide. Likewise. Okay. Here we go. Description column, 2 columns for the amounts. Again, description column, 2 columns for the amounts. This is the Sankar's business statement of profit or loss. Statement of profit or loss for the year ended. Don't forget that. For the year ended. For the year ended. Oh, I don't have space now. For the year ended, put the date, please. Put the date, please. Don't forget the date. 31st December 2018. Then we have Sankar's business statement of financial position. Financial position as at, don't forget that it's not for the year, it's as at. No. As at 31st. No, you can't put the date like that. Please put the date. Please put the date. It's going to the rear corner, I mean the left corner. so won't be visible for you, but you put the data. Okay, main headings, you better take down the main headings. Sales minus cost of sales in the profit or loss statement. Sales minus cost of sales. Under cost of sales, you have items. What items? Opening stock, purchases minus closing stock, this is added, this is subtracted. Remember the items. There is no other way. No other way. Okay? Just remember the items. Okay? For purchases, there can be, under purchases. Under purchase, there can be items such as carriage inwards, loading expenses, duty, custom duty, import charges can be there. But I have just kept a space for those items. Okay, that is the space. Then we have, yeah, that's right, plus other incomes. Okay, minus or subtract expenses from that. These are headings. These are all headings. All headings, okay? These are all headings. There are items under these. Items. There can be items, okay? Under expenses, there can be categories. There must be categories. Expense categories. What categories? Distribution expenses. I'm just writing in short, okay? Distribution expenses. I'm just using short forms. Don't use short forms at the examination. And put comments afterwards. So we used the same terms and same way that you did in the video. We wrote this X. What is this X? Distribution expenses. You have to write distribution expenses. Distribution expenses. Right. Then we have admin expenses. Very, very carefully we have to use the space very, very carefully. No? Isn't it? Because space should be managed. Yeah, done. Distribution expenses. Then we have admin expenses. That means administration. Administration expenses. Then we have financial expenses. These are all headings. Done. Do the same for the SOFP, that means statement of financial position. Put the headings. Non-current assets. Then we have current assets. Okay. Okay. What next? What's next? Then we get capital. equity and liabilities. Equity and liabilities. Headings. Under equity and liabilities, what? Tell me. Under equity and liabilities, capital. First item is what? Capital plus net profit. You have to remember by heart, no other way. Okay. Net profit minus drawings. Remember the order. Then again we have to struggle with the space. You know? Yeah, I think that's enough space here. Capital plus net profit minus drawings. Manage your space when you are preparing the statements. It comes with practice. You have to do the questions, rule the statements, and work out these questions. Some people are there. They are in the belief. They are in the belief of, or else, how can I say? They are in the opinion. They are in the idea of doing this question, financial statement question, in the examination, right at the O-level examination paper. When somebody asks them, there are students. When somebody asks them, how many questions have you practiced? How many questions have you done? Financial statements, how many financial statements have you prepared? Like 1 or 2 I have prepared. I know the system, I know the method. It's easy now. In the exam, I'm planning to select the financial statement question. I'm going to do it and balance it. Oh, really? You have done 1 or 2 questions? And the next one you are going to do right at the exam. Very nice. Good. Nice going. Not gonna work. You have to do your questions, all the past paper questions, as much as possible, as many as possible. With the practice only, you will be perfect. Liabilities. Current, non-current liabilities. And current liabilities. There you go. These are the formats. Nicely, neat and tidy, clean and clear. Let's start the question. We start the question with adjustments. Stock as at 31st December. That is the closing stock, 22,000. How to record the closing stock? It's right here. Closing stock should be mentioned in the SOPL, statement of profit or loss. Closing stock 22,000. It's a subtract. It should be subtracted. It's a deduction. So mention it within brackets. Important. I mean, these are tips that will make the question easy. Within brackets. Oh, you're going to add it. Then under current assets, you should mention closing stock. Remember, all the adjustments should go to both statements, this one and this one. All the adjustments should be adjusted on both. and you have to draw 3 columns for amount in your examination. Okay, this format also 3 columns, in this table also 3 columns for amounts. Rupees, rupees, and there should be another column for rupees, but you can do with 2 columns the way that I'm going to do it. First adjustment done. Next adjustment, building should be depreciated annually at 20%, annually at 20% on straight line method. Building should be depreciated. Okay, soon as you see the depreciation adjustment, go to the trial balance, take the building, cost of the building 350,000, do a working 350,000 into building should be depreciated 20%. Okay, 20%. What is the answer? 70,000. 70,000 is the depreciation per annum for the year. Yeah, we have to calculate the annual depreciation because statements are prepared for an year. Statements are prepared for an year. That is why take the annual depreciation 70,000. Check whether there is a provision for depreciation. Yes, there is a provision for depreciation. That is the second step. Check whether there is a provision for depreciation. It is there. It is 140,000. 140,000. As at 1st January 2018. Provision for depreciation. Now 140,000 you should mention here as the this is the depreciation annual, and the 140,000 is the provision, right? Which 70,000 is the annual depreciation, should be taken to profit or loss statement. 70,000 should be profit or loss. 140 with the provision, the addition of both should be taken to the SOFP. Got it? Got it. So annual depreciation 70,000 in the profit or loss statement. Where? It's a depreciation expense. It's a loss for the business. In the profit or loss statement, under expenses, admin expenses, children, we put building depreciation 70,000. If it is motor vehicle depreciation, you put under distribution expenses. If it is building, you put under admin expenses. If it is furniture, you put under admin expenses, administration. Now to the SOFP, statement of financial position. Where do you put building? Building is under non-current assets. Building cost should be 350,000. Depreciation should be how much? 70,000 plus 140,000. 210,000. 140 plus 70. 210. 210,000. Now we have to draw that column which I mentioned, the third column. I told you, right? I didn't draw it, but it must be drawn to do this SOFP in a methodical way. And I'm going to name these columns. Right now, I'm going to name these columns. Cost column, provision for depreciation column, carrying value column. Carrying value. You can even say net value or net book value, okay? What to do when these two information are recorded? This is depreciation, children. Depreciation means the reduction of value in non-current assets during the usage. Yeah, you use them, they get old, rusted, busted. So you should deduct or subtract. 350 minus 210, it becomes 350, it becomes how much? 140,000. Yes, that is it. Now we are done with the second adjustment too. Okay. Are you all right with this? I hope you are all right. We are done with the second adjustment, this one. Third, accrued electricity charges as at 31st December, end of the year. 1,000 is remaining, not paid. Accrued means not paid, unpaid. That is a liability. Accrued electricity 1,000. It's a liability. Yeah. Red bills have come to the business, not paid. So it's a liability. Should go under current liability. Accrued electricity 1,000. Okay. Okay. Then how do you record it in the profit or loss statement? Should be recorded in both, right? It's an expense, but accrued means unpaid. Unpaid, there should be a paid amount also. There is electricity charges 5,000, unpaid 1,000, total 6,000. Should go under admin expenses. Electricity charges, given electricity charges 5,000 in the trial balance, unpaid 1,000, total is 6,000. Totally 6,000. All right. If you can show the working here, 5,000 plus 1,000. If you can show the working, it's better. It will be advantageous for you, not for me, for you. 5,000 plus 1,000 within brackets. Next. Done. We are finished with the adjustments. Finished with the adjustments. Now let's go to the trial balance. Oh yeah. Tick one by one and take your items. Buildings already taken. Tick it. Provision for depreciation already taken. Tick it. Stock, opening stock. Take it. Not tick it. Take it. Opening stock. 1st January, no. Opening stock. 30,000. Take it. Opening stock is already here. Take it. 30,000. Next, Purchases, take it. 220, sales, 300, take both. Purchases, 220,000, sales, it's there, 300,000. Huh. Sales, 300,000, purchases 220,000. Don't do any calculations until you finish recording the items. Debtors, it's a current asset, 40,000. Debtors is a current asset, 40,000. Debtors 40,000. Where do you put assets, liabilities? Here, no? It's a current asset, 40,000. Debtors is a current asset, it's 40,000. Done. 40,000 taken. Tick and go. When you go, you have to tick and go. You have to tick and go. Tick and go. Creditors, 30,000. Let's take that. Creditors is a liability. It's a liability. Assets and liabilities go to SOFP now. Creditors put under liabilities, SOFP. Creditors, 30,000. Okay, done. What else? Discounts allowed. Discounts allowed is an expense, 2,500. Discounts received is an income, 2,000. So discounts allowed, 2,500. Discount received, 2,000. Okay, income and expenses go to profit or loss statement. No? Incomes and expenses go to profit or loss statement. Discounts allowed is an expense. It goes under distribution expenses. Discounts allowed, 2,500. Discounts received is a income. It goes under other incomes. Discount received, 2,000. Voila, that's it. Now we have more. Bad debts. Electricity charge is already taken. Discounts allowed taken. Discount received taken. Electricity charges we took because there was an adjustment. We took it. Remember? Already taken. Bad debts, 1,500. Oh, worse expense. I don't like bad debts. It's an expense. Which type of an expense? It's a distribution expense. Bad debts. Distribution expense. How much? Bad debts, 1,500. Okay, we'll put it. Bad debts, 1,500. 1,500. Okay. Okay. Next we have something important. I'm going to use red color for that. Bank loan. It's a 12% bank loan. That means that 12% is the interest rate. You have to calculate the interest for the bank loan 100,000. Just like that, just like we did depreciation, let's do the bank loan adjustment. There is adjustment. It's hidden. Take the bank loan. I'm doing the adjustment. Take the bank loan amount, value into 12%. How much is it? How much is the interest? Interest is 12,000. Interest is 12,000. 12,000. Now, there is another item called bank loan interest. See, there is. Bank loan interest is given 10,000. You calculated. Now you know it's 12,000. The interest of the bank loan. Okay, this is the bank loan. This is the interest. 12,000. But the given interest is 10,000. What is the problem here? 10,000 is paid, but the interest, bank loan interest, is 12,000. 2,000 accrued, not paid. It's a liability. Put it under current liabilities. Bank loan interest accrued. Bank loan interest 2,000, and put the total bank loan interest 12,000. It is an expense. It's a financial expense. Bank loan interest, not 10,000. The relevant full amount should be mentioned in the profit or loss statement. 12,000. Done. Are we finished? I don't think so. Oh no, there is one more, two more, three more items. Cash balance, current asset, capital also. Let's put both, because both assets and capital go to assets and capital go to SOFP. No, we can put at once. Cash balance, asset, capital balance, capital 124,000. Cash balance is an asset, current asset. Cash 2,000. Capital 124,000. No drawings, right? No drawings. I didn't get drawings. 124 and cash balance 2,000. Are we done? Cash balance 35,000, men. What, men? 35,000? No. Cash balance 35,000. See. Telephone charges 2,000. Okay. We'll put telephone charges now. We didn't put telephone charges. We'll put it now. Admin expenses. Telephone charges. That is 2,000. Cash balance, my dear, it's 35,000. That is the case. No cash balance, only 2,000. If we have a balance of cash only 2,000, what is this business? Huh? Yeah, that is why the cash balance now it is 35,000. We made a mistake. It was put here as 2,000. Corrected. Now it is 35,000. Done. Finished. Oh yeah. Taken. Cash balance also taken. Telephone charges also taken. Capital also taken. 124 is the capital. We are done with entering the items. Both adjustments also entered. Now we are going into calculations. Calculations. Let's start calculations. Into calculations. Let's put an end to this. Let's put an end to this. Okay. You start calculations from the gross profit section. Get the gross profit first. To get the gross profit, you have to get the cost of sales. 30,000 plus 220. This is 250,000. 250,000. I left a small bit of space. Can you remember? There. Small bit of space is there. That answer is called cost of stock to be sold. We took it. Opening stock plus purchases. Cost of stock to be sold. Then you minus the closing stock and you get the cost of sales. You get the cost of sales. Get it. You get the cost of sales. Closing stock is 22,000. 250 minus 22, 228,000 is the cost of sales. Okay, I drew that line to make it clear to you. Cost of sales 228 within brackets, because it should be subtracted from sales. 300,000 minus 228,000. How much? It's 72,000. That is what? Gross. There, children, we got the gross profit. Hey guys, we got the gross profit. 72. Here we go. 72. Then you have to plus or add other incomes. That is 2,000. Put that 2,000 here. Come on guys, come on. Put that 2,000 here. Add the 2,000 to 72,000. You get 74,000. 74,000. That is the total operations income of the total operations from the total income, or the gross profit plus other incomes. 74,000. 74,000 minus the total of expenses from that. Minus the total of expenses from that 74,000. Let's take the total of expenses. We have 2,500 plus 1,500, 4,000. 4,000. Then we have admin expenses. 70 plus 6, 76. Is it 6? Yeah, 76. We have 78,000. 78,000. Get it, guys. Get it. 78,000. 78. $78,000. Then we have financial expenses, only 12. Only 12. Only 12,000. Right. Now, if we had the third column, this 74,072 plus the other incomes, the answer goes to the third column. Then 74,000 is in this column, the third column. Okay. If it was in the third column, if it was in the third column, like this, if this was, you know, to make it neat and tidy, that is why we need the third column. If this was in the third column, 72,000 plus 2,000, if the 74 was here, it would have been easy for us. Okay, would have been easy for you also if it was here 74,000. Then the total of expenses also go to the third column like this. Total of all expenses. 78,000 plus 4,000, 82,000. 82,000 plus 12,000, 94,000. 94 also goes to the third column. Then 74 minus 94, how much is the net profit? 74 minus 94. It's a net loss, isn't it? It's a net loss. It's a loss of 20,000. 20,000 is the net loss. You have to write net loss transferred to capital. Net loss transferred to capital account. Okay, 20,000. We are done with the profit or loss statement. Finished off. Now this net loss should be taken to where? Net loss should be taken to where? Where? To the capital account, and the capital is in the SOFP. It is here. Yeah, it's not a net profit, it's a net loss. You don't know whether you are going to get a loss or a profit. You have to write both. Net loss. Net loss. 20,000. Bracket it. Start the calculations. Okay. Go to the upper section. Get the non-current assets total. It's 140. Get the current assets total. It's 40,000 plus 22,000. 40 plus 22, 62,000. 62 plus 35. How much? 97,000. 97,000. The total of current assets. 40 plus 22, 62. 97. Okay. 97,000. And we get the total of assets. That is the total assets. Right here. Total assets becomes 140,000 plus 97,000. 240,000. 237,000. 237,000. This is the total assets, children. We are almost done. Almost there. Almost there. 237,000. Got it? Now the capital and liability section. Equity and liability section. Capital 124 minus 20. You get 104,000. Yeah, 124 minus 20 because it's a net loss. Net loss minus 20. 104. 104. Oh, we did not mention the bank loan here. Did we mention the bank loan here? No, the bank loan should be mentioned. We took the bank loan. We did the calculation. Can you remember? We took the bank loan. Yeah, the bank loan, see? Yeah, we took the bank loan. We did the calculation, 100,000 into 12%. But we didn't take the 100,000 to the SOFP. So the bank loan 100,000 should be here. And at the current liabilities to non-current liabilities. Total of this. 33,000 is the total of this. And non-current liabilities plus current liabilities total should be taken to the third column. Just to extend the lines a little bit like this. Okay. How much? 133,000. 133,000. The addition of non-current liabilities and current liabilities. 133,000 plus capital. How much? 104. 133,000 here. You add all together. 133 plus 104. 237. 237,000. Assets of the business, total assets of the business. Total assets of the business became equal to total capital and liabilities. Total assets became equal to capital and equity and liabilities. So assets equals capital plus liabilities. That is the accounting equation. The SOFP, statement of financial position, shows that, and it's balanced. With that, children, we are done with 2019 paper. This is the last question, 7th question. If you want to get a look at it, there you go. The entire view of the two statements. With that, we wrap up this video and the 2019 O-Level Business and Accounting paper. As always, till the next paper, I hope you'll do your work hard, play harder, and good luck to you. I'll see you with the 2020 O-Level paper in the next video. Thank you very much. Have a good time.